When will the bull market in uranium finally commence? That is the question we're going to try to answer in this video. First, let's talk about the price action. We have on the week the Sprott Uranium Miners ETF up 2.69%, getting that bounce I was talking about. We were overdue for it last week. In relation to the broader market, S&P 500 only up 0.63%. So what happened last week was there was a hope that perhaps the energy crisis that's going on in the world will be alleviated by the fact that OPEC agreed to accelerate oil production following US pressure. The thought is that if oil prices come down, inflation will come down and the Fed can stop raising interest rates and crashing financial markets. And so everything bounced, and we're seeing outperformance in uranium stocks. So what we have to think about is the macroeconomic backdrop, right? Because it's all interrelated. It's impossible to deny that uranium stocks are not at least partially correlated to the rest of the market. Look at the yearly chart on the NASDAQ. There was just an absolute cratering in the last 6 months. Look at the spot Uranium Miners ETF, similar price action, albeit a lot better than the NASDAQ. And so if we're correlated with the broader market, then the interest rate situation is absolutely crucial to understand. Look at this chart. You can just see how inversely correlated non-profitable tech in the white line, the Goldman Sachs non-profitable tech index, how inversely correlated it is to the interest rates. So you can just see back in the 2000 pandemic, we had an absolute collapse in interest rates in March 2020. That led to an incredible rise in all risk growth assets. Since then, we've had a continuously spiking interest rate, and that has caused tech to collapse, and uranium stocks are just collateral damage. Now, if you're an investor, you think of that as an opportunity if the fundamentals are still bullish and the price action hasn't caught up. But the question we have to ask ourselves is, if interest rates are this important to tech stocks and that contagion can bleed into uranium stocks, well, when are interest rates going to finally come down? Because that is the question most investors are looking for, right? As soon as this yellow line comes down, the rest of the market can finally breathe, and uranium stocks will finally be able to realize their true potential. Now, obviously, in environments like this, you want to be tied to hard assets. There's a reason uranium is outperforming tech in this inflationary environment. There's a lot of reasons, and we're going to get into them. But the question remains, when will the Fed finally lower interest rates and allow broader markets to breathe and allow uranium to realize its full potential? Well, obviously, the Fed is looking at economic data. Let's look at the macroeconomic data with them, understand what they are seeing. In May, people were hoping for a bad jobs report so that the Federal Reserve could manipulate rates down instead of up. Well, this is what we actually got in May. Jobs boom is starting to cool, raising hopes for Goldilocks scenario. So people are hoping that because the growth rate in jobs was slightly lower than expected, the Fed may be less incentivized to increase rates and continue to crash markets. Well, here's an analysis from JP Morgan on that jobs report. JP Morgan chief U.S. economist said that the Fed won't be satisfied with the slowdown suggested by Friday's numbers. It's moderating, but it's not moderating to a level, I think, where it's consistent with the Fed's inflation goals. He said of the wage growth data, adding that policymakers would probably want wages to cool towards an annualized 3.5% pace, a rate that officials view as aligned with their goal of 2% inflation. So the jobs data wasn't bad enough to justify the Fed stepping in and saving markets. And so what you can expect there is that economic data will continue to slow. The Federal Reserve will continue to hike rates until it causes a broad financial collapse in all markets. That is the macroeconomic backdrop. That's why uranium stocks have been soft. It's a liquidation event. We've talked about how we could just expect choppy markets as we wade through these murky waters. But obviously, what every good investor does is take advantage of discounts and assets that are on sale if the fundamentals are truly bullish. And what makes uranium so special, apart from the fact that it is in a multi-year supply deficit and how the prices have to rise to incentivize mining production to meet the growing demand. Apart from all that, we have geopolitical turmoil. So it's obviously in this environment much better suited than most tech assets and most other assets. So let's dive in. First, we have the West desperately needs to invest in uranium mining. We've talked a lot about this. The West is pushing for greater nuclear power capacity to help wean itself off Russian fossil fuels. More investment in mining, conversion, and enrichment facilities may be necessary to fully extricate Western nuclear fuel chains from Russian involvement. So we've absolutely talked about this. This is just one bullish dynamic that uranium assets and stocks get to benefit from, the fact that we need further investment. And so just like clockwork, we have this out of the US government. U.S. Energy Secretary Granholm says U.S. should not be importing uranium from Russia, and that a new comprehensive uranium strategy to address U.S. supply is now in final review to be released any day now. Do you guys think we will get a pump once that is released? Absolutely. We're talking about the United States government investing hundreds of millions, if not billions of dollars into a uranium strategy and infrastructure. So obviously an early stage investor gets to take advantage of these assets while they're trading off in anticipation of bullish news and the renaissance that's taking place around the world, which we're absolutely going to get into. Don't forget that in addition to the supply demand crunch, in addition to the geopolitical turmoil, we also have technology as a tailwind to the uranium space. Obviously, the only thing ever holding uranium back in nuclear energy was the perceived psychology that perhaps it's not as safe as other energy sources. Well, technology is solving that problem. The bipartisan infrastructure law is investing in this advanced reactor by X Energy Nuclear that uses developed fuel pebbles that can withstand extreme temps hotter than molten lava. X Energy is developing a pebble bed reactor that they say can't melt down. The reactor continuously refuels by adding fresh pebbles daily in at the top as older ones are discharged from the bottom. Each pebble remains in the core for a little more than 3 years and are circulated through the core up to 6 times to achieve full burnout. The spent fuel is then placed directly into dry casks and stored on site without the need for interim or active cooling. So the free market realizes the value of nuclear energy. They realize that the only problem was the perceived psychology around its safety. Well, the free market is solving that problem with technology. Here is another great potential technological innovation. The energy in nuclear waste could power the US for 100 years, but the technology was never commercialized. There is enough energy in the nuclear waste in the US to power the entire country. The technology to turn nuclear waste into energy, known as nuclear fast reactor, has existed for decades. It was proven out by a United States government research lab pilot plant that operated in the 1960s, but it was never economical enough to develop at scale. Several private nuclear innovation companies are developing commercial fast reactors, but even still, there are supply chain issues in the United States for producing the fuel that goes into fast reactors. So we're having a second look. There's technological innovation happening in every corner of the uranium space. And so this is just one potential technological catalyst on the horizon for nuclear energy as the world wakes up to it. So can you imagine if we get safe, cheap, dense energy that powers the world? Well, that is what the entire world is banking on, and that is why there is a global renaissance. Let's dive right into all the countries that are reawakening to nuclear energy. We have Belgium, Flanders, overwhelmingly supportive of long-term operation for nuclear power plants. Region is home to 4 of country's commercial reactors. Belgium bullish on uranium. Vietnam. Could Vietnam be on the verge of restarting its nuclear program? Ministry of Industry is calling nuclear an inevitable trend around the world. Government of South Korea will spend $321 million to foster a small modular nuclear reactor business, having passed feasibility tests for large, long-term state-run projects. China is going to build over 150 new nuclear reactors in the next 15 years, which is more than the rest of the world has built in the past 35 years. Look at this chart. All these trends are being reversing. Japan's declining interest in nuclear power, reversing. France, reversing after it's tried to decline. US flat, that's going back up. And so China is leading the way, but the entire world is undergoing a nuclear renaissance. So it is a perfect storm. We have bullish supply demand fundamentals. Here's the chart I keep showing how there is a massive gap that needs to be filled and the spot price needs to rise to incentivize miners to bring it online. We have geopolitical turmoils forcing governments to invest heavily in nuclear energy infrastructure. We have a global reawakening, global renaissance around the world, countries starting to shift. We have technology making nuclear energy even safer. And so it is an absolutely perfect storm bullish setup for this asset. We saw a pickup in the uranium spot price for good reason last week. The macroeconomic backdrop is the only thing keeping it down. And so we'll stay on top of the rate story. It may take a few more months to get out of these choppy waters, but there is so much going on, so much bullish news. This discussion is for informational purposes only. Please consult a certified financial planner when making any decisions about investing. And do your own research before making any decisions. Investments are risky and you can lose lots of money in them.